Schwab, thanks so much for being here.
Nice to see you.
What is the biggest question you are getting from clients right now?
Well, I think one of them being, is this more of a shift out from, what's become this kind of positioning argument? Things got too one-sided for the mega caps, and maybe shifting into, are recession fears now more justified because of this one jobs report? It is a little amazing to me to see so much focus on one report itself. And of course, yes, the broader context is that things have been slowing in the labor market, but I'm not sure we should be, having so much of a knee-jerk reaction to just one, especially with the aggressive nature of the drop in risk assets. But I do understand why it's happening.
And go into that more. Listen, you are the expert. I am not the expert. But I can tell you this. I'm doing a long time. I have not seen a market move like this because of a small miss in the job market, or maybe the Federal Reserve should cut, 2 days ago instead of 2 months from now. Every guest we've had on is like, this is positioning, it's technical stuff, it's carry trade, hedge funds. This is not mom and pop selling, is it?
Well, I think you have to keep in mind where we were, coming into this with, the investor sentiment environment was incredibly frothy. You basically got back up to, kind of all-time highs if you were looking at a combo of behavioral and attitudinal measures of sentiment, but also the fact that, you had this really strong rally and sort of the snapback in the rubber band on the small cap side because of what happened with the June CPI report. Now, of course, a lot of that is reversing, but I think that in conjunction with what had been from a positioning standpoint, a lot of this trade kind of moving into the mega cap world at the same time that you started to see this breakdown in breadth under the surface. So a lot of this and how we're kind of looking at it is, the indexes from a volatility standpoint catching down to what had been weakness sort of under the surface. Because you have to keep in mind, too, up until this point, the average max drawdown for members in the S&P was approaching 20%, getting up to 16, 17%. For the Russell 2000, it was more than 30%. The max drawdown at the index level has really not been that bad this year for the S&P, for the NASDAQ, for the Russell. You haven't even yet gotten to outright correction territory. So I think a lot of this is the index is kind of catching back down to what has been the story under the surface.
By the way, not even the worst day of the year for the S&P.
Yeah.
That was July 24th, where he fell 2.3%. But here's what does not worry me, it vexes me, which is that the rapidity of these moves now, even though the market's gotten faster every day for 20 years, I get it.
Yeah.
But when small caps gain 11% in 2 weeks, and Nvidia is down 25% off its high of a month and a half ago on no news, by the way, and we have two of the worst days of the year in the same 2-week period, it just feels like everything is a lot more violent these days.
Even for small caps, though, you have to. The other thing I think it's important to point out is a lot of the move that you had seen post CPI, and I think the excitement around the fact that the Fed was finally getting ready to start cutting rates. I think a lot of the excitement was just kind of a delayed reaction because the one unique aspect, and I think probably the most unique aspect, at least of this market cycle, especially when you look at prior tightening cycles, when you look at prior bear markets, full bear market cycles for the S&P, the period of October 2022 to October 2023, the first year of the bull market for the S&P, the Russell 2000 was flat.
Okay.
A few days after that, it actually broke through its low from 2022, which has never happened before. So I think a lot of it has been a delayed reaction and kind of hopes of small caps finally getting to start moving again. But now that's being sort of blunted a little bit because of the growth scare that has crept back in. I think a lot of it too is the question now, not whether the Fed goes in September, but the decision between 25 basis points and 50 basis points. That reintroduces some of the risk that it's a panic kind of cut and they have to sort of catch down to the economy.
If they did the rare intra-meeting cut, that would be the panic cut. Sit tight. We'll get into that. Kevin, don't go anywhere.